Hello, everyone, and thank you for tuning into the Liberty Report. With me today is Chris Rossini. Chris, welcome to the program.
Good morning. Great to be with you, Dr.
Good, and we'll follow up on our many statements about the economy, but in particular the Federal Reserve. Some statistics have been out recently, but there was a report out this past week that caught the attention of several people, and I believe it originated out of St. Louis Fed, that the future plans for the Fed, as if they had control of the future. They have control of the printing press, but not the future. But the change in policy is that they're deciding that they want to allow inflation to run a little hotter, which is probably telling the truth of what's really happening, because all they'd have to do is tell us the truth on why people are in the streets and their jobs aren't paying what they deserve and all these problems, that inflation is a real problem already, and middle class is shrinking, all those problems that we've talked about. But now they're saying they're coming up front. So does this just mean they're going to tell us the truth more? Or do they have some statistics in their projection, because they have hundreds and hundreds of economists there, and every once in a while one of them will be exactly right. But I think they all know what's coming and where the problems are, but I think most of their energies go into deceiving the people, trying to fool them into thinking, well, everything is just rosy. And they're able to come up, and actually the tremendous monetary inflation we've already had, the massive inflation has given the economy a boost. GDP, real GDP hasn't gone up, and debt has skyrocketed. But they still have statistics enough to reassure the stock market. And I think the main goal of the Fed for probably a decade has been to support for the stock market. And that, of course, came out of the last recession, depression. And I believe they're still struggling with that, because they're already using the tools of going back to QE. So everything isn't hunky-dory, as the jobs report claims, but there's a lot of problems out there. And here they're telling us, okay, we're doing so well, we're going to allow inflation to go a little hotter. So it remains to be seen what it means, but I know it'll fit into our concerns and our assumptions that price inflation, the consequence of monetary inflation, will continue and will get much worse. And I think the Fed in this report is admitting that.
Right, Dr. Paul, and I don't think the Fed realizes, and many people don't realize, the damage that they have already done. The money has already been created. It's in the system by astronomical levels. They're still even pumping on top of it hundreds of billions recently. And so it's already in the system, and you could compare it to somebody at a bar that drinks excessively. The alcohol's in the system. The damage is done. Even though everything looks great at the moment, the hangover is coming, and it's unavoidable. But, central planners, they tend to think that they can control the situation. That's what they think their job is. But economic forces are always squashing the plans of central planners. Just think of all the hyperinflations that have taken place throughout history, and even in the modern day in other countries. There are always central planners lying in the wake who thought that they can control the situation, but economics is much more powerful. So, that doesn't mean that in America we're going to experience hyperinflation, but hyperinflation is not the only road to economic ruin.
Right. I think this is a sign of a capitulation, but I think we saw some capitulation here a couple months ago when the overnight rates shot up to 10%. So they had to start the QE program again. They don't like it to call it a QE, but that's what they're doing. They've told the markets that they're going to pump in $60 billion per month, and they're at least going to take it up to $400 billion. That's no small change, but it was enough to assure the stock market would go up, because the stocks have gone up. But if you look at real economic growth, if you look at the GDP and productivity and all, it hasn't gone up. So there's the diversion of that. Stocks up, real growth is actually down. So they are talking about reassuring everybody, look, something's coming, and even though we didn't quite get our 2% inflation rate, when it gets started, we're going to allow it to go, because they know darn well it's higher than 2%. And I think one of the reasons why these numbers are deceptive is that we've talked about a lot, as well as the left-wing politicians have talked about it, and the middle class is in big trouble. So we have the middle class is in trouble where they don't get as good as jobs as they used to have, and they are always, right now, they can't even pay their bills. They're living out in the street, and there's a lot of problems in that way. But the 63% of all the new jobs that are coming in the last 20 years, those jobs are, low-paying jobs. At the same time, even though we don't have the government admitting what the CPI is doing, but for these people who lose a good job and go back for a cheaper job, prices still went up. So the discrepancy there is magnified compared to a rich person who doesn't have to worry about the cost of a loaf of bread. And I think that's why there's so much bitterness. I think that's why there's, the contribution of the social conflict about the poor distribution of wealth. And it's an excuse for the far left to demand socialism, which would be the worst thing, because we have this socialized totalitarian monopoly system of money, which is the real culprit. And that's where it is. But that is ignored, because on the short run, both conservatives and liberals, they like this money machine. They don't call it modern monetary theory, but that's actually what it is. The progressives are saying, well, we need to print the money faster. But how much faster can you do it? There was just a little hint there that there was a liquidity crisis here a couple of months ago, and boom, the switch is turned on again. And so for them to say that, well, we want to encourage this inflation. We've worked for 10 years and we never really got our 2% destruction of the currency, the price inflation. So to have this as a goal, I always thought that it was just totally nuts if they're trying to preserve a sound currency and avoid debt and avoid the malinvestment and all the problems that we're facing. So it would be nice if wealth could be created by printing money. Zimbabwe would be doing very well, and Venezuela would be doing well. But creating new monetary units of money doesn't do any good. It just dilutes value of money and distorts the whole system. But this is what we're up against. But I think this little notation that let the inflation run is preparation of something that is already running. They know about it. It's conditioning the people for some price increases, I think, in the next year or two. And I think that system is far from, over. It's far from over, because there's a lot of ramification, because it's related to debt. And until the debt gets liquidated, it's not going to get paid off. Until the debt gets liquidated, there's going to be these kind of problems. So if there's a shortage of liquidity for overnight borrowing, is already a big problem. There's going to be a lot of other shortages too, because debt rules the day right now, everywhere from individual debt to corporate debt to student debt, the whole works, and government debt. And here, we're supposed to be the leaders of the free world with free markets, and we're big spenders. I mean, we're running up the debt like crazy, and so deficits don't matter. And so I think in a way, what I see here is the Fed warning us that it's going to get a lot worse if you're worrying about prices going up.
Oh, it is going to get a lot worse. And it's interesting that they say they want to make up for recent low inflation, or what they call low inflation. Isn't that nice of them? That's like, a guy on the street saying, the last time I robbed you, I let you keep that $20 bill. Well, today I'm making up for it. Give me the 20 as well. And all of this taking of our purchasing power is unconstitutional. It's the exact opposite of what the Constitution says money should be. We want our money to increase in value. I want to be able to buy more with my money, not constantly less. $5 used to buy me 2-3 loaves of bread, and today $5 buys me 1 loaf of bread. That's what the Fed has done to me and to everyone else. That's what they do to the value of the dollar when they create it by the trillions and hundreds of billions, and they can call it QE or whatever other name that they want. The result is the same. They're taking our purchasing power from us. It's unconstitutional and it's wrong.
I think this comment came from a Fed official, maybe again from St. Louis Fed. and it said we will never have hyperinflation because we're different. We have a central bank that protects the value of our money and prevents that from happening. So that was the reassurance they gave us. And of course, the way we see that, that's exactly the reason we worry about it, is because we do have a central bank that prints money for the world. It is true, because we can export our inflation, and of course we have to maintain an empire. So a lot of our expenditures are used to go overseas, buying weapons and getting cheaper products, and all these things that we benefit by, but it all adds up into debt, and the debt is ignored. And one day people are going to wake up and realize there's a limitation to it, because the pressure will be put on the dollar. No matter how great we are right now, powerful and strong economically, the day will come when people will start using other currencies, like they already have. You can read stories every day that they're selling and buying more oil in gold and other currencies now than ever before. So the attack on the dollar is already there, and it's amazing that it just doesn't collapse, but it will eventually when the confidence is lost. Confidence is a psychological factor. Sometimes you can have confidence and beliefs and convictions that are artificial. But for the moment, they're real. And that is the confidence in the stock market going up forever, as long as the Fed is going to let the inflation run, which means they're going to print whatever is necessary. Japan tried it 20 years ago, and they're still not really out of that problem, because we now, buy up securities. It's not like we just maneuver around and manipulate the money supply and interest rates. I mean, we buy up the securities. That's what QE is all about. And certainly on the bailouts, we bought a lot of those. And they're worrying about, well, we shouldn't own this much. We have to shrink our balance sheet. And I think they're about convinced that there's no way to shrink the balance sheet, and they're going to have to convince everybody that's not necessary. Nobody will care, and it's not inflationary. But time will tell, and right now I think people should be concerned and preparing for some tough times ahead, because if we see what's happening now already with the lower middle income class, such as we see they can't make it anymore. I mean, when you read stories about, well, the young people don't like houses. Well, I have trouble believing that young people don't like to have a house. So they live longer at home, and now they're specializing in building houses that look like just a box. And that's supposed to solve the problem of inflation. Shrinkflation is what that is. They end up paying a lot of money for this stuff. So it's deception, and the government, that's their job. That's the job of the Federal Reserve. Deception and supporting the securities market. It has nothing to do for helping the middle class survive with a sound currency and encourage them to protect their wealth and take care of themselves. It's always this promise. We have to police the world. We need a lot of money, and we have to always have a safety belt for everybody, for everything, to take care of them, because nobody should have to have the responsibility of taking care of themselves. And the end game is not so much that some people were taken care of very well and it didn't disrupt things. The end game is what we're seeing right now. It was for just a few people, just a couple people would pay a little bit in Social Security, but all the social welfare programs are all set up, and they expand automatically, and therefore you can't turn them off. And if you read between the lines and sometimes write exactly what they're saying, the Fed is warning us that the inflation is not stopping. I think in many ways Trump has won this argument, and he's on the side of the modern monetary theory, and he doesn't worry about debt. He doesn't matter about the Fed, and he tells the Fed keep those interest rates low. And it's almost like the Fed has totally capitulated to the badgering of the president.
That's right, Dr. Paul. I'll finish by saying, the Fed tells us that they have these rules, a 2% inflation rule, and now they're going to break that rule. There's only one rule when it comes to central banking, and that's that there are no rules. What they say is a rule today will be broken tomorrow. All you have to do is think back to 2008 and what they did with the Wall Street bailouts. The Fed was bailing out AIG. I mean, where were the rules then? There are no rules. So that's the one thing to take away from the show too. Also, when the prices really noticeably go up to where people really notice them and start complaining about them, you have to know that the Fed is the culprit, because you're going to hear every other excuse in the book. You're going to hear that it's the greedy businessman, probably from the left. That's who they're going to attack. How dare they raise prices? As if businesses, they have to deal with rising prices too. It's not the businessman. It's not going to be Russia or China or any other name that they pull out of a hat. It's the Federal Reserve. They're the ones that create the money. They're the ones that dilute its value. They're the ones that are responsible for the rise in prices.
Very, very good, Chris. And I want to follow up with talking about what the Federal Reserve is supposed to be doing, or at least the mandate, which is artificial, of course, and that is maintain steady prices, don't allow price inflation to occur, which is impossible when you print the money. And the other is to have a sound economy and full employment. And they concede, of course, manipulating interest rates now. That's a concession. But what is missed is something more simple. And I think for people to try to understand the Fed and our Constitution and tradition and what other countries have done, you can almost hone in on one thing, and that is dealing with the unit of account. And the world, basically, a unit of account has been the dollar. Now, the Constitution talked a little bit about that only gold and silver could be legal tender, and you could define a dollar as a weight of gold or the weight of silver, and that's all that is illegal. But they don't talk about that. The unit of account is so strategically important, because if you don't have an account, something you can define, and then you absolutely purposely eliminate the other information that the market could give us, and that is the interest rates to tell us really what's going on with the current. So they've eliminated that, and they've gone to negative interest rates. It's totally insane. It cannot work, but they will keep doing it as long as there's an illusion out there. We have magicians, at the Federal Reserve, and they'll pull the rabbit out of the hat. And the amazing thing that, as I've watched this over the years, is the Federal Reserve, it didn't get a lot of attention when just a few of us were talking about this, but they always took credit for good times. Like right now, today, I heard Powell saying something, well, the stock market is up. It looks like our policies are working. They always want credit for good statistic. But when there's a crash, like the crash of 8 and 9, guess who takes the credit for getting us out of it when they don't really get us out of it? It's the Federal Reserve. So they want credit for the good times, and they want to get credit for getting us past the bad times, and they cause bad times all along, because they don't do the number one job that they have, which is a constitutional mandate, and that is define and maintain the value of the currency, the unit of account. Because to me, it's always like, how could an architect build a skyscraper if their measuring rod changed every single day? So when you're building an economy, a worldwide economy, and you have different countries printing money at different rates, and you can't define it, you have a mishmash in the economy, and then they have to have trade wars to iron out the problems that the monetary system has created. So we used to have a definition of our unit of account, even though I was not allowed to own gold in the first 40 years of my life, there was sort of a pseudo definition that was worth $35 an ounce. And even in the 60s, I could still turn in a paper dollar bill and get a silver dollar. But that's long gone, and that meant that it's been eliminated, and that's why we have this massive debt. And it's the debt that's going to come down on us, and it's the lack of a definition for our unit of account, and it's the inability for us to understand the significance and the evil of manipulating interest rates for the purpose of keeping the stock market up. And everybody throws up their hands and say the rich are getting richer and the poor are getting poorer, and and it's liable to allow the far left socialists to move in to offer modern monetary theory. I want to thank everybody for tuning in today to the Liberty Report. Please come back soon.